This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
All right, welcome back, everybody. You know what time it is. We are here with the one and only Cryptopolis. Dave, how are you today?
Doing great, Brad. How are you?
I'm doing really well. There's some amazing news going out here, and unlike the bear market, we don't even know where to start with all this. Where do you want to start here? We got charts. We got Brian Brooks this morning calling when we're going to have clarity. We've got the SEC's opened a new office for fintech. Where do you want to begin?
Well, let's talk about the fintech a little bit, the FinHub that they're calling it. Mm-hmm. And that really looks like almost like a mirror of the Singapore BIS FinHub that they've got started in Singapore, right? So they've got they've got the East now. Now we've got the West. So we've got the West doing the same thing. It's looks like a bit of a mirror of that. And so they're getting serious about this. This is not something that they want to, squash anymore. It's not something that they want to squelch. They want to have innovation, and they're doing, I think they're going to take a lot of clues from the BIS's FinHub in Singapore and say, hey, look, what do you guys got? What are you going to share with us? Let's get this thing moving. Now, we got to go right to this Brian Brooks interview this morning on CNBC. I was like, I'm watching CNBC this morning, and I'm like, Brian Brooks is coming on? Ooh, perk up my ears. And he really made some incredible statements. If you got that clip, let's play that again, because that is absolutely insane.
I do. And we have a couple clips that are just insane today. And we're going to get to those in 1 second here. And one of which is a clip that we'll be hearing in a few minutes about the XRP ledger and CBDCs. Oh my goodness. But let's start right here with this straight fire clip from Brian Brooks. Let this thing go right here. And it's very short, 1 minute. Here we go.
But Brian, I wanted to follow up on the point you made in terms of you think good things are coming by the end of the Trump term for cryptocurrency. Are you in the camp who believes that more regulation in cryptocurrency will be a good thing overall for the industry?
Yeah, look, I wouldn't say more regulation. This is not like your breakfast cereal box where it talks about weight, not volume. I don't think we need 50 regulations instead of 2. But what we do need is clarity about what's allowed. And so we need some guidance, for example, about whether banks can connect directly to blockchains as payment networks. The answer has to be yes, right? We needed answers about, can banks custody cryptocurrency so that institutions felt comfortable adopting? And you saw what happened when we gave that clarity. So you have clarity across a variety of areas that I think you'll be seeing just in the next 6 to 8 weeks, which will make it easier for crypto investors to know how to invest, to know how institutions can be in this asset class. And those are the things that are driving prices at this point. It may have hit a bubble 2 years ago, but with more clarity, institutions that see this as a real thing are going to adopt at scale, which they've already started to do. So stay tuned.
Wow. Stay tuned. Dave, there's a lot going on in that 1 minute. Where do you want to start to unpack this?
I got 3 really critical points out of that. And number 1 was the timeline. So he's looking at a 6 to 8 week period that would bring us probably mid-January. He said before the turnover here, before President-elect Biden gets into office, he's going to have this. There's something's going to happen. So that's really interesting in itself, because obviously he's not going to make a timeline statement like that unless he knows something, because otherwise he's going to look like a fool, right? Mm-hmm. So he's got something that he wants to share with the rest of the cryptocurrency community, saying, hey, look, just keep an eye out for things over the next few weeks. The second thing that was really, really critical to me was the fact that he said, you know what? Banks really need clarity that they can tap into the blockchain. Can banks tap into the payment network on blockchain? And he asked the question, and then he answered it. He said, yes, they have to. They want that clarity that they can tap into the blockchain networks. And so they can go into the ledger. They can actually do all those things. They can tap into the payment networks through the ledgers. And then he had another critical point, was the fact that when he became the deputy chief for OCC, he said that, hey, banks can custody cryptocurrencies. That's one part of the puzzle. Second part is, can they tap into the blockchains? And so now those two things together are working really as kind of a framework, maybe for what we're going to be seeing over the next 6 to 8 weeks. And those are just absolutely huge.
I don't even want to say anything because you just said it, and I'm blown away by it. I think it's so enormous. I've been in awe since I've heard him say it. I'm telling you, and it's not to be an alarmist to anyone. This really feels like the moment we have been waiting for is 6 to 8 weeks away. You know, within that time frame, this threshold is going to be transformational to the crypto space.
Yeah, we've never had a timeline, I think, like this ever stated by a public official before. And this is something, because he made it clear in that clip that he wants clarity not only for institutions that want to get into blockchain payments, but also for investors. And so, of course, we know that XRP is KYC AML. We know XLM is KYC AML. We know that at least those two coins are the ones that are probably going to hit the ground running as soon as we do get some clarity, because they already have the KYC and all of the FSOC and the, all of the regulatory agencies, they have already complied. And so I don't know where it leaves a lot of the other coins. I'm not going to speculate on what's going to happen if we do get some clarity and we see XRP is deemed a currency and XLM is deemed a currency. What's going to happen to the other ones? But from just a fundamental perspective, and we're going to get into some charts too, which you have pulled up here. But on a fundamental perspective, they're ready to go. I think they've been preparing for this, for a very long time.
That's right.
And now, with Brian Brooks in there, he's like, hey, look, this is what's going to happen. Institutions need clarity to get in and out of the blockchain and the ledger technology to access this payment system. And we need clarity on whether or not, hey, look, we can tap into it, but we may have some residual. We might want to hold some XRP, hold some XLM, so we can transfer those payments very, very quickly without having to source it in the market. We want to hold it. Can we do that? And it's not just custody for customers, but it's custody for themselves. And that's what the clarity is really for.
It's pretty amazing what you're saying, because I just feel like it's so spot on. And it comes back to a comment you had made on this channel, I think it was over a year ago. You can't legislate what you haven't defined. You can't regulate what you haven't defined. And that's exactly what we're seeing here. And we have talked about, to ad nauseum, to the point of that, in order for banks and large institutions to use this technology and to use this asset XRP and other cryptos, by the way, they've got to understand, what is this protocol? What I'm sending this message across? What is this asset I'm inserting this value into for the receiver to get, and how do we define this so I understand the liability between me and the receiver, right? That's really what we're talking about here, just that moment of time, that 3 to 4 seconds, and having that defined. And it's clear as day that Brian Brooks is saying the protocol is a payments network. That's what it is. Right?
Yeah, exactly. He's talking about the XRP ledger.
That's right.
Ledger. He's talking about the ledgers as being a payment network.
Yes.
And so if you're doing a payment network, what are you really transacting? You're transacting in a digital currency and a fiat currency, and you're making exchanges over a network which is distributed worldwide. And so transactions can be instantaneous. The thing that makes this so interesting to me is the fact that if banks are starting to transact and they can actually tap into the blockchain payment networks for XRP, and I would suggest also XLM, because they're really sister and brother. Really.
They are.
Sister and brother there. So and I think that there is just, the way I see the market right now is that the central banks, the IMF, the SEC, the CFTC, they're all really kind of focused in on XRP and XLM for some reason. It just kind of creates this picture of the payments network is really going to be supported by these two tokens. And they're all focusing in on that. I haven't heard them mention anything about any other kind of, payment network, because we know that those two are the fastest. They will settle quickly, and they can probably be used in just about any kind of transaction that you talk about in settlement, from just cross border currencies to the settlement of securities and stock certificates in the exchanges, to bonds, to just about anything that you can think of. Those two are the ones that are going to be used, I think, to do that. I can't imagine, them using any other coin. I won't name any of them, but those are the two that, in my, as we approach the 6 to 8 week period, those are the two I think that are going to just outstanding. And if you look at the charts over the last couple months on XRP and XLM, you notice those are the ones that really started taking off very, very quickly in this market. And they haven't given up as much as other coins have. And I think the reason for that is because they anticipate that this regulation is going to favor them the most.
Absolutely. And I want to get to where we look at the chart, but before we do, I want to play one more exciting clip for everybody here. And it really is. Now, you know what it is too, don't you, Dave? I know you do. Okay. Yeah. So this brings us right back to right here, is that, and shout out to Digital Asset Investor for turning me on to this, because oh my goodness, man. I mean, this is really groundbreaking. Take everything that we just covered, the whole 6 to 8 weeks, we're going to have the clarity we need. We're talking about banks using blockchains, their payment networks. It's clearly defined. We're going to see, I believe, from that, as we've just discussed, that we'll see a currency designation, at least for XRP and possibly XLM as well. And, obviously that is defining that, and it makes sense. But on the heels of that rolling out this morning, we also have, and as Digital Asset Investor says, it's like Windows for central bank digital currencies. Just log in and create your CBDC on the XRP ledger, plug and play monetary policy. It's so on like Donkey Kong. Yes, it is. Yes. This is 1 minute and 47 seconds, and I'm going to spin this, Dave, and this is just incredible here. I want everybody to get this firsthand and just really understand what this means in light of what Brian Brooks has just said. I think these things are not exclusive to one another. I think they absolutely go hand in hand. Let's play the clip here.
These provide a solid basis in which the use of the CBDC and the attributes of the ledger and issuance can be altered to meet different needs or options for central banks. What we can see here as CBDC levers. The first set of levers are operational attributes. Even aspects such as centralized versus decentralized record keeping, consensus algorithms, accessibility and authorization can be altered to meet the specific CBDC needs for a specific central bank and market. The next set of levers are economic attributes. Most economic protections against spam needed for public networks may be irrelevant for CBDCs, but other economic factors down to divisibility of the currency, inflation and interest-bearing aspects, as well as other monetary and fiscal policy impacts can be altered. And the final set of levers are the native functionality. The baseline functionality set can be added to, altered, or reduced based on the needs of the specific CBDC. New transaction types can be added. Logic, such as smart contracts, may be incorporated into the core platform as a specific requirement, and incorporation of sovereign identity artifacts may be needed. This enables a project to develop one or more CBDC environments to test technical, functional, and operational outcomes across many different scenarios, and is built on a foundation already used for live payments today, meaning eventual issuance of CBDC can be a smoother, more certain process.
Wow, Dave, CBDCs launched like a plug and play off of the XRP ledger, and we can sculpt these depending on your needs for your specific CBDC and your sovereignty to your currency, he's talking about as well.
Yeah, incredible. I was listening to the CEO of the Stellar Foundation talking about they've already are in proof of concept with Argentina and a couple other countries. XRP is probably in touch with other countries as well, and we know XRP and XLM are kind of interchangeable. And I'm sure that, hey, here's the thing about XRP with CBDCs: it's liquid. It's convertible to just about every currency in the world. And, the settlement times are seconds. So there is, for a central bank to go in and create their own stable coin or to create their own interbank settlement coin at this point without the liquidity that they need is impossible. I just don't think they can do it. Not in the time frame that they really want it to happen. Yeah. And so they have to use the existing infrastructure that XRP and the XRP ledger present in order to actually make this a reality in their systems. And I think they're dying to do it. They're just absolutely, I can't imagine them going into the year 2021 without something on doing something on blockchain. They just can't do it.
No, I agree with you. And I tell you, it's just, talk about the word imminent, right? This is imminent. When you couple what they're revealing to us and allowing us to see, which obviously they've been working on for a long time. You spent a career in government. You know how that works. If they're showing it to us, they're not showing it to us in a play-by-play and like, hey, this might fail. Why don't you watch while it happens? That's not how good business is done, and it's not done that way in government, nor is it done that way in the private sector, certainly. But, when you couple that and then exactly what's being said now from Brian Brooks, really, and the launch of a new office from the SEC to really just oversee fintech. And I went over the rules this morning that SEC has put out about an analysis. It's almost their version of a Howey test against,
Yes.
Cryptos, right? Is really what it is. It's this ad hoc kind of, it either fits or it doesn't, right? And you could truly, just like the Howey test, you could decide to lean into one principle or another and decide to make it whatever you want. But looking at those points that they make throughout there, it is clear to me when I look at it that XRP is seen as a currency from that structure that the SEC is providing there.
Right, and it's important to note that this is from the FinHub, the new financial hub, and it's not an official statement from the SEC.
Yeah, well said.
But the point is that if it was clear that XRP was a security or any of the coins, basically they're talking about any digital asset. Mm-hmm. We wouldn't have to have this type of level of thinking and analysis in order to make the determination. It would be clear cut, but it's not clear cut. It doesn't fit into the Howey test box cleanly and neatly. It's kind of messy. And so they have to work through these issues. And I think it's a good start. I think that they're going to continue to try to clarify that. They're all, if there's coordination going on, which I'm sure there is, between the OCC and the SEC about this issue, it has to come out in the legislation eventually with some sort of clarity. And I think they're trying to work through those issues now.
Yeah, I think so too. And it's funny because in the FSOC report that was released yesterday, I went through that and covered in this morning's video, and it was pretty interesting that in there they talk about inter and intra-bank settlement with digital currencies, and it's exactly what the World Economic Forum has been talking about since early last year.
Yeah, absolutely. That was a spot on video. That was a great video. If anybody hasn't seen it, they really should go back and take a look at that because I found it an incredibly useful kind of a comparison between what other, what the CDBG the toolkit was saying compared to what FSOC is saying, and really you put those two together beautifully to create a picture of what is likely to happen with XRP in the future. And hey, you can't deny I mean, look, if none of the agencies were talking about blockchain, if none of the agencies were talking about XRP, then we're out here just kind of, blowing wind, right? But we have solid evidence and proof that they're actually doing this type of work with central banks. And so, I guess if you wait for the clarity, if we're waiting 6 to 8 weeks, maybe if we do get that clarity that Brian was talking about, then maybe the opportunity is gone, because, hey, look, speculators are called speculators because they speculate on the future of an asset.
Yeah.
They don't have the clarity. Once the clarity comes, the opportunity may be, at a point where you can't get in anymore.
Oh, that's such an amazing point. And you're absolutely right. If you're watching this video, you're a speculator in this market.
Yeah, everybody's a speculator because we don't have any inside information.
Exactly. So everybody's speculating about all of this in this market. And you're absolutely right. And should you wait for that clarity, it could change that entry point, and you may not be able to take the position that you currently have if that were the case.
Absolutely. And if you've been in the market for a long time and you've been accumulating, you're probably sitting in a good position. If you're new to this market, don't invest more than you can afford to lose. Just like, and we are not investment advisors, so this is not investment advice. It's pure technical analysis from this point that the charts look very, very bullish. And this is different. This market is different right now than it was in 2007, 17, and the early part of 2018. Very, very different. And if you have that XRP chart, this is a good time to bring that up because I want to make a couple of points on this. I spent 40 years in the markets doing analysis of markets, and I've been doing it now in cryptocurrencies. And there's a lot of similarities in the charts with commodities and with stocks and equities. But there's a couple things that are really, really important that stick out to me. And if you go all the way back, I don't know are you on the weekly chart there?
I'm on the weekly 5-day right now, yes.
Weekly 5-day. Well, so if you go back to, if you can hover your mouse over December 11th of 2017, when XRP really, really started taking off there. If you can hover your mouse right over there, you can see, you can see that week of December 11th, 2017 was a massive week for XRP, and the volume, and this is on the Bitstamp exchange, the volume was 802 million. Now from there, volume kind of dropped off, right? And we had a tremendous run up over the next couple of weeks. It only lasted about 4 weeks. And then we kind of topped out at $3 and was it $3.31 there on Bitstamp on or about the first week of January of 2018. Now, if you scroll over to the right and starting at about January of this year, we'll take a look at January through the current time period here.
Got it.
The volume far surpasses the volume that we saw in December of 2017. In fact, while it was hitting a low back in the March low on March 9th, in the weeks that followed, just massive, massive volume, much more so. We're talking about 1 billion XRP just about every single week being traded. And I believe that's an accumulation pattern there that happened throughout that period from the point at which we hit the low in March of about 10 cents all the way up to, we hit 21 cents. And now recently we have also exploded in volume. And if you go to the week of November 23rd, where we hit a high of about 80 cents on Bitstamp, the total volume just for that week was 1.72 billion.
Wow.
So when I look at issues that are being, or whether it's commodities or stocks or anything like that on a pure technical analysis basis, I'm looking at an increase of volume as the price rises, or at least it's being accumulated in a stable, kind of a stable trading range. That's what makes this different than 2017, early 2018. And I think it's sustainable. I think we're just going into the first phase of a much, much larger move for XRP, XLM, and most of the cryptocurrencies.
Wow, well said. And to your point of your analysis, this morning we hit a very defining number that really shows you in the technical analysis that we're making that bigger move. What was that number, Dave?
Yeah, so in the last couple of days, I do analysis for OnlyCoin, and when I do my analysis a couple of days ago, I mentioned that XRP had the potential to pull back to between 54 cents and 58 cents. And at the time I made that analysis, XRP was trading between 63 and 64 cents. And so, that looked like support. Now, this is important because if it doesn't act as support, then there's something else going on in the market that we're not aware of. But it has acted. We hit that 68 cent level this morning, 68 and some change. And now we're starting to bounce off of it a little bit, or at least it's stabilizing in at that area. Now we're at 59 cents. So that's an important technical level to watch, that 58 cents, 54 cents, maybe at the lowest point. If you're a trader or if you're just accumulating for the first time, that's a good area, I think, to look at. And at that point going forward, I would anticipate here a very, very strong push off of that level. And maybe even a very, very, within the next couple of weeks, a retest of not quite the old high at 330, but maybe up to the 280, 250 level.
Wow, certainly blowing past that dollar mark. And you know what happens when you cross that dollar mark. I mean, you see just people flood in because of the FOMO when they crosses a dollar.
Yeah, now we didn't have any clarity back, zero clarity back in 2017. And now we've got the OCC talking about it. We got the IMF talking about it. We got central banks talking about digital assets. So there's a lot more in Brian Brooks is very, very concerned, at least from that clip that we played, that investors have the clarity they need to understand what kind of investment this is. And so I'm incredibly encouraged by all the developments that we've had since 2018. And also in that clip, he said that he also mentioned that he said in the last 2 years or 2 years ago, maybe digital assets were in a bubble at that point, and he said they're not now. Mm-mm. I mean, that was kind of I'm paraphrasing.
That's right.
But he said basically, 2 years ago, maybe it was in a bubble, but this is different.
Yeah, because this comes down to use case. And when you declare it money, you got real use case, and the banking system knows what to do with it because they already deal with money. And this just makes things faster. And I tell you, to the point of it being money, there is a real economic problem going on that you and I have covered extensively here on the channel and on your own channel as well. And, the velocity of money is going to be extremely important in this equation going forward, right?
Yeah, well, we had the creation of jobs report this morning, and they were anticipating 440,000 jobs added to the economy. We only got 250. Way below. There is no velocity of money. The velocity of money is really, it's just dying. And so we really need to see, and I think one of the big pushes for the central banks and other regulatory agencies to really get this adoption going is to get institutions to connect to the blockchain payment system and to the ledger in order to create the velocity of money that's needed in order to pick up the economy.
Absolutely. Well said. So final thought this thing, Dave, where we are, everything that we've seen, I'm not so sure we're going to see Ripple move now. What are your thoughts and a final thought here?
You don't think Ripple's going to move?
I don't think they'll move. I don't think they'll need to because you're getting ready to get the clarity they need. If they move, I think they'll move because they just don't like the taxes in San Francisco.
Well, I think they had a little convo with Brian Brooks.
Yeah.
he told them last night to watch CNBC this morning.
Yeah, unpack that box.
So yeah, I think you're right. And I think it was because, and like I said, I think it was just because of the frustration that they had with the regulatory environment they knew it. Clarity needed to be, created. Brian Brooks is on the same page.
That's right.
Right.
That's right.
And so my final thought is that I'm extremely bullish on the entire market. I think that we're going to continue to go higher, whether it's at these levels or maybe a little bit lower. But I'm extremely bullish, especially over the next few weeks and months. I mean, going into the middle of next year, I think is just going to be an amazing time to be a crypto speculator in this market. And I'm looking forward to it. I can tell you that.
Me too. What a journey we are on. I mean, it really feels like we're about to see something very, very transformational for the entire digital asset space, and I believe in default by XRP as well, because I think that's
absolutely. A couple of shout outs, and I think we're gonna be good unless you got something else.
No, that's it. I'm good. Throw them out there.
All right. Of course, my good friend Dan at Tradingology. Shout out to him. Dan has all of the courses that I've created over the last 20 years and all of the algorithms that I've created at tradingology.com. Go hit up Dan for information about that. Second is that I'm doing cryptocurrency analysis every single day at onlycoin.io. And if you go there, it's a free sign up. All you have to do is put in your email and I send you out my analysis every single day. I pick a different coin to do analysis on, technical analysis. I don't really get into the fundamentals because they're well known out there. And I think a lot of the fundamentals are already built into price action. That's my philosophy. And so I want to see the price action, and I do the analysis every single day. So go to onlycoin.io. Third, shout out to Jay Hyatt 139, my good buddy here in the local area, who I always appreciate, and just thankful he's my friend.
Absolutely. And we got to get him back on the show. We got to definitely get him back on. Even if we got to zoom him in, we're going to figure out a way to bring him in. That's going to be great. Thank you so much, Dave. Everybody hit the like and subscribe. Thank you, man. And check out the links in the description box in the comment section for anything you may want or need. They are trusted links, that's for sure. Dave, I will catch you on the next one. Thank you so much, man.
Take care.
You too.